This is Sabina CPA. I'm the founder and principal of Base CPA Plus. We advocate less taxes and more profit. Today, we're going to talk about the issue of what can you do if you cannot pay IRS. If you're self-employed or set up your business in a flow-through entity, such as a partnership, LLC, or S-Corp, each year when we prepare your tax return, we will also have prepared quarterly estimated tax vouchers. If you're employed, you would have had some of your pay withheld from your paychecks to cover for the income taxes. This is a government requirement to prepay your taxes through withholding or estimated tax installment, and to adjust those prepayments if circumstances change during the year. Nonetheless, there will always be occasions when you owe tax when we file your return by the extended filing deadline of October 15. Moreover, some of you may not have the fund available to pay up when the tax bill comes due. So now let's discuss what not to do and what to do. What not to do. You should not hold off on filing your returns until you can come up with the money to pay the tax due in full. If a return is not filed on time, you will be hit with the failure to file penalty in addition to penalty and interest on the unpaid tax bill. Then what can you do now? First is to pay as much you can, as soon as you can, to minimize the late payment penalty and interest, even if that means liquidating investment or borrowing money. While you may not like cashing out savings or borrowing to pay a tax bill, the interest charge on borrowing may be lower than the combined penalty and interest owed to the IRS on late payments. The second thing you need to do is you may want to consider borrowing from a 401k plan or life insurance if they are available. While the interest payments are not tax deductible, you are essentially borrowing from yourself since the payments on the loan replenish the account or life insurance value. The third thing you can do is if you need time to cash in asset or arrange for a loan, you can apply for a short-term extension of 60 to 120 days. The IRS does not charge a fee for a short-term extension, but penalty and interest continue to accrue on the unpaid tax. If the aforementioned options are not available, here are a more complex option that requires you to deal directly with IRS. The first one is installment payment agreements. You can request an installment payment agreement from the IRS. Here again, interest and penalty continue to accrue until the tax bill is paid in full. In addition, the IRS charges a one-time user fee for setting up an installment agreement. Form 9465 installment agreement request is generally used to set up an installment agreement. However, if you have a balance due less than $50,000, you can apply online for a payment agreement instead of filling the Form 9465. So you can go online at irs.gov. Generally, the fee for an installment agreement is $225, but the fee can be as low as $31 if the agreement is set up online and you agree to pay by direct debit from a bank account. The fee is $107 if the agreement is not set up online, but payments are made by direct debit, or $149 if the agreement is set up online, but the payments are not made by direct debit. A reduced fee of $43 may apply for lower income individuals, and the IRS may waive or reimburse the fee if certain conditions are met. If the tax due pay plus penalty and interest is $50,000 or less, as an individual, you can arrange for a streamlined installment payment agreement. The maximum term for streamlined installment agreement is 72 months, that's 6 years, and the minimum monthly payment is $25. If the total amount due is greater than $25,000, but not more than $50,000, you must agree to a direct debit agreement to qualify without submitting a financial statement. If you do not agree to make the payment by direct debit, then you must complete Form 433-F Collection Information Statement. Streamlined agreements are available to small business with $25,000 or less in unpaid tax liabilities. These agreements give a business 24 months to pay by direct debit. Remember, IRS generally will not take enforced collection actions such as levying on your wages or bank accounts when an installment agreement is being considered. While an agreement is in effect, for 30 days after a request is rejected or during the period the IRS evaluate appeals of a rejected or terminated agreement. The second option that you can use to work with IRS is use the extension for undue hardship. The Form 1127, application for extension of time for payment of tax due to undue hardship, can be filed to extend the time for paying tax. However, the IRS concept of hardship may not match yours. The form instructions make it clear that undue hardship means more than an inconvenience. You must show that you would have a substantial financial loss, such as selling property at a sacrifice price if the tax is paid when due. If granted, a hardship extension will generally not last for more than 6 months. Interest on the tax due will run until the tax is paid. Moreover, penalty may be imposed if the tax is not paid within the extension period. The third option that you can use is called offers in compromise. If you are struggling to make ends meet, you may qualify for an offer in compromise. An offer in compromise is an agreement between you and the IRS that settles your tax liability for less than the full amount that you owe. Absent special circumstances, an offer will not be accepted if the IRS believes that the liability can be paid in full as a lump sum or through an installment payment agreement that we discussed earlier. In most cases, the IRS will not accept an offer in compromise unless the amount offered by you, the taxpayer, is equal to or greater than the reasonable collection potential. What is this reasonable collection potential? That's how the IRS measure your ability to pay and includes the value that can be realized from your assets, such as real property, automobile, bank accounts, and other property. The reasonable collection potential also includes anticipated future income, less certain amount allowed for basic living expenses. A streamlined offer in compromise program involving fewer requests for financial information and greater flexibility in determining your ability to pay may be available for you with annual income up to $100,000 and the tax liability of less than $50,000. If you find this video useful, please click on like, subscribe, and forward to those who may also benefit from this tutorial. Please also head to basecpaplus.com to sign up for our email newsletter full of tips for less taxes and more profits. Until next time, God bless.